The crypto world is a siren song. It whispers promises of unimaginable riches. 10 times gains? Possible. Total ruin? Also possible. I, like many drawn to this digital frontier, craved a taste of that life-changing profit. But which path to choose in this chaotic market? Countless strategies promised the moon. Most felt like risky gambles. I needed something different. That's when I stumbled upon it. A strategy whispered in online forums, touted as both simple and effective. It promised consistent gains with minimized risk. Skeptical yet intrigued, I decided to put it to the test. 30 days. One strategy. My journey into the heart of the crypto roller coaster was about to begin. The strategy I chose had a catchy name. The moving average crossover. Sounds complicated? It's not. Imagine two lines dancing on a price chart. One line represents the average price over a short period, let's say 10 days. The other, a longer period like 25 days. When the short-term line crosses above the long-term line, it signals a buy. Cross below, time to sell. This crossover, the theory goes, indicates a shift in momentum. It's like catching a wave just as it starts to swell. Sounds simple enough, right? Armed with this knowledge and a modest amount of capital, I took the plunge. My 30-day experiment had officially begun. The first few days were a blur of charts, trades, and adrenaline. I remember waking up each morning with a mix of excitement and dread, my mind racing with the possibilities of the day ahead. The market was a living, breathing entity, and I was just trying to keep up. Every tick of the price felt monumental. Each movement on the screen was like a heartbeat, a pulse that I was in tune with. The highs were exhilarating, but the lows were equally devastating. A small win sent my spirits soaring. It was like hitting the jackpot, a rush of euphoria that made all the stress and sleepless nights seem worth it. I felt invincible, like I had cracked the code to endless success. A dip, however minor, brought a wave of doubt crashing down. Suddenly, all my confidence would evaporate, replaced by a gnawing fear that I was on the brink of losing everything. The emotional whiplash was intense. The emotional roller coaster was as real as the fluctuating numbers on my screen. One moment, I was on top of the world. The next, I was questioning every decision I had ever made. It was exhausting, both mentally and physically. One day, I'd be riding high, celebrating a perfectly timed buy. The thrill of seeing my predictions come true was unmatched. It felt like I had a direct line to the market's secrets. The next, I'd be glued to the charts, fear gnawing at me as the market dipped. I would sit there paralyzed, watching my gains evaporate and wondering if I should cut my losses or hold on for a rebound. Sleep became a luxury I could barely afford. Nights were spent staring at the screen, my eyes burning from the strain, my mind unable to shut off. The market never sleeps, and neither did I. My phone, constantly buzzing with price alerts, was both a lifeline and a source of anxiety. Each notification could mean a new opportunity or a fresh disaster. It was a tether to the market, one I couldn't bring myself to sever. This, I realized, was the true cost of playing the crypto game, the emotional toll it takes. The highs and lows, the sleepless nights, the constant anxiety, it was all part of the package. And yet, despite it all, I couldn't walk away. The market had become a part of me, for better or worse. 2 weeks in, and I was at a crossroads. The strategy, so far, had yielded mixed results. Some trades were winners, others not so much. My portfolio was up slightly, but the constant stress was starting to get to me. Was this really worth it? I considered throwing in the towel, cutting my losses, and my stress levels, before things got worse. But then, something interesting happened. The market, which had been range-bound for days, suddenly exploded. My chosen cryptocurrency surged, and the moving averages crossed with a vengeance. It was a buy signal loud and clear. I hesitated, then took a deep breath and went all in. Section 5. The Moment of Truth. Did it pay off? The next few days were a blur. The price continued to climb, and my portfolio ballooned. I was, for the first time in weeks, sleeping soundly. Had I cracked the code? Was this the life-changing profit I dreamed of? Then, just as quickly as it had surged, the market reversed. The price plummeted, taking my profits with it. My stomach lurched. This was it, the crash I'd been dreading. I watched in horror as my gains evaporated, the numbers on my screen a cruel reminder of my gamble. 30 grueling days after it began, my experiment was over. Section 6. Lessons from the Crypto Trenches. So what was the final tally? Did I achieve the 10 times return I'd secretly hoped for? The answer, unfortunately, is no. After a month of emotional ups and downs, my portfolio was almost exactly where it started. I'd risked, I'd learned, and in the end, I'd essentially broken even. But here's the thing. I learned more in those 30 days than I could have imagined. I learned about technical analysis, about risk management, and most importantly, about myself. The journey was filled with late nights, endless research, and constant monitoring of the markets. I found myself glued to the screen, watching every little fluctuation, trying to predict the next big move. It was exhausting, but also exhilarating. I delved deep into the world of technical analysis, learning about candlestick patterns, moving averages, and the importance of volume. I realized that while these tools are helpful, they are not foolproof. The market has a mind of its own, and no amount of analysis can guarantee success. Risk management became a crucial part of my strategy. I learned to set stop-loss orders, to diversify my investments, and to never invest more than I could afford to lose. These lessons were hard-earned, but invaluable. And through it all, I learned a lot about myself. I discovered that I have a higher tolerance for volatility than I initially thought. I learned that emotional discipline is crucial in this space. The ability to stay calm and composed, even when the market is in turmoil, is a skill that cannot be overstated. I also learned that no strategy, no matter how promising, is foolproof. The market is unpredictable, and sometimes things just don't go your way. But that's okay. Every failure is a learning opportunity, a chance to refine your strategy and come back stronger. In the end, the most valuable lesson I learned was the importance of perseverance. The crypto market is not for the faint of heart. It requires dedication, resilience, and a willingness to learn from your mistakes. But for those who are willing to put in the work, the rewards can be immense. So while I may not have achieved the 10 times return I had hoped for, I gained something far more valuable: knowledge, experience, and a deeper understanding of the crypto market. And that, in the long run, is worth its weight in gold. Section 7. So, is this strategy worth it? The million-dollar question: would I recommend the moving average crossover strategy? The answer, like most things in crypto, is nuanced. It's not a get-rich-quick scheme. It's not a magic bullet. It's a tool, one that requires careful consideration, disciplined execution, and a healthy dose of luck. Is it worth trying? Perhaps. If you're new to crypto, it can be a good way to dip your toes into the waters of technical analysis. But remember, no strategy is a substitute for thorough research, careful planning, and a solid understanding of the risks involved. Section 8. Your turn. Join the crypto conversation. My 30-day experiment may be over, but my crypto journey is far from finished. What about you? Have you tried the moving average crossover strategy? What were your results? What other strategies have you experimented with? The beauty of the crypto world is that it's constantly evolving. There's always something new to learn, a new strategy to test, a new perspective to consider. So, share your thoughts, your experiences, your wins, and your losses. Let's learn from each other and navigate this exciting, volatile world together. Section 9. A new challenge: exploring the DCA depths. As I close the chapter on my 30-day experiment, my mind is already buzzing with new ideas. The journey has been enlightening, filled with ups and downs, and a myriad of lessons learned. Each day brought new insights, and now, as I reflect on my experiences, I can't help but feel a sense of accomplishment. But the world of finance is ever evolving, and there's always something new to explore. One strategy in particular has caught my attention: dollar cost averaging, or DCA. This method is often recommended for those who wish to mitigate the risks associated with market volatility. By spreading out investments over time, DCA aims to reduce the impact of market fluctuations, offering a more balanced approach to investing. Unlike the quick trades of the crossover strategy, DCA involves investing a fixed amount at regular intervals, regardless of the price. This means that whether the market is soaring or plummeting, the investment continues steadily. It's a disciplined approach that requires commitment and a long-term perspective. It's a strategy that prioritizes patience and consistency over trying to time the market. The idea is to avoid the emotional highs and lows that come with trying to predict market movements. Instead, DCA encourages a steady, measured approach, which can be particularly beneficial in the often unpredictable world of cryptocurrency. Could this be the key to navigating the crypto roller coaster with a bit more stability? The crypto market is known for its wild swings, and finding a way to manage these fluctuations could be a game changer. By investing consistently, regardless of market conditions, DCA might offer a smoother ride through the turbulent crypto landscape. I'm eager to find out. The prospect of a new challenge is always exciting, and I'm ready to dive in. There's a sense of anticipation, a thrill that comes with the unknown. What will the next 30 days reveal? How will DCA compare to my previous strategies? Stay tuned for my next 30-day adventure as I delve into the world of DCA and put it to the test. I'll be documenting every step of the way, sharing my insights, challenges, and successes. Whether you're a seasoned investor or just starting out, there's always something to learn. Join me on this journey as we explore the depths of dollar-cost averaging together.